Okay, Brian Tracy wrote 3 books on the way to wealth. They're fairly extensive about ways to grow and build and develop your business. BusinessWhitt's the name of my company, and then myself, I'm working with business owners, executives. We're going to talk about the customer formula. Now this is pretty simple, but you got to understand it, right? Customer formula is that you take the number of leads you have times the conversion rate, so leads, people that you're interested in your product or service, times the conversion rate, how many people actually buy that, and that'll give you the number of customers that you get. Then we have the revenue formula. Right? The revenue formula is customers from the customer formula, and we take a look at the average sale amount. Right? Now some people say, I don't have an average sale amount. So yes, I know, maybe every invoice that you process is a little bit different, but if you take the sum total of all your invoices divided by the number of invoices, you will get the average sale amount. So you can get and define the average sale amount, right? So if that average sale amount is able to go up, right, you increase your revenue. And then we talk about the frequency of sale. How often does somebody buy something from you? Is it daily, weekly, monthly, annually, right? And if I can get them to buy something from me more frequently, then my revenue number can go up, right? So it's the customers times the average sale amount times the frequency of sale, right? And that generates revenue, right? So the profit formula says, hey, take the revenue number from before, which included customers and all those other items that we had, and subtract cost of goods sold. Some of us have different levels of cost of goods sold. These are the contracts where you're buying your products and services to provide, your final product and service to your customer. When you subtract out the cost of goods sold, you end up with a term called gross profit, right? After gross profit comes this thing called operating cost. Operating cost is buildings, expenses, payroll, salaries. Then whatever's left over after that is what your profitability is. So if you're looking to grow your business, the idea is to get to this net profit. This is after you've paid yourself and your employees and buildings, marketing expenses, whatever those kinds of things are, right? So all of that adds up to the net profit. All right, so let's see how this works in practice. What happens when you play around with these things? And what I'm going to talk about right now, I'm going to walk through a little scenario that I've got written up here. And you want to have a net number of $70,000 in net profit. So what's amazing about this formula is what a small difference will do to these numbers, right? And we're going to take 10%. And the new total is $117,568. Right? And it starts with getting somewhere between 8 and 9 new leads a month.